What's up guys, it's Andy here. Welcome back to another exciting episode on the Andy Kandola Show. So today I want to go ahead and share with you guys the top 5 high dividend REITs or real estate investment trusts that I believe are a great buy right now while the market is still recovering from this pandemic. Now I'll go ahead and share with you guys the top 5 high dividend stocks and which ones I currently have in my portfolio and why I believe all 5 of these are a current buy based on where we're at in the current economy. Now, as of right now, the stock market is down today. The market has been all over the place. Basically, with the pandemic, we're all waiting for the next relief package or the next stimulus package from the government, and nothing has passed yet. So the market has been kind of trading sideways in the meantime. As of now, though, the market is down, but it's been basically trading sideways. So we'll go ahead and keep an eye on that. There's also been a lot of news going on as far as Microsoft acquiring TikTok. So I'll go ahead and keep you guys posted on all those things, but for this video I want to go ahead and stick to this topic of the top 5 high dividend growth REITs that I personally really like, as well as we'll go ahead and look at my portfolio and I'll share with you guys some of the changes in my current portfolio, which is sitting at right around $49,900. So pretty close to hitting that 50,000 mark, but we'll see if that gets hit today or in the next week here. Now guys, let's go ahead and jump right into the video. Now the first stock that I personally really like, and this is gonna be my all-time favorite REIT. Now if you're not familiar with REITs, REITs are real estate investment trust. Basically, by investing in a REIT, you're investing in real estate through the company's stock. And the nice thing with REITs is that they do pay out high dividends, and they're usually higher dividends than some of the other sectors within the market. Now I do have REITs within my portfolio, and I'll go ahead and share with you guys which ones those are as well out of the 5 that we're going to go ahead and look at. And now just jumping into the first one, that is going to be Realty Income Corporation. Now Realty Income Corporation is one of my favorite REITs of all time. That's because I know a lot about this business myself. I actually have businesses where I go ahead and I have leases with commercial tenants like this. What Realty Income Corporation does is they are a landlord in the commercial sector. So they basically own a lot of plazas, they own a lot of real estate, and when tenants go ahead and pay them rent, that's how this company goes ahead and builds revenue. Now Realty Income Corporation year to date is down still about 15%. Right before the pandemic, this stock was consistently going up and it reached as high as $80 at one point. And now after the pandemic, the stock was hit, but as we can tell here, it is slowly starting to go ahead and climb up. Now just in the last month, Realty Income did go ahead and collect 91% of their rent, which is really good. That's the highest rent that they collected since they got hit during the pandemic. So that's a really good sign, because in the last quarter they had collected about 80%, but as we can tell here, Realty Income Corporation collected 91.5% of its rent in July. So I really do like this company and I like where this company is going. And the nice thing with the real estate sector is that a lot of these companies, because land is never really gonna go anywhere, there's a different use for land no matter what it is. These companies own that real estate, and even if the businesses go ahead and shut down, these companies can go ahead and rent out the space to other tenants. So they always have the potential to grow and they always have the upside on that. Now additionally, if we go ahead and look at the dividends for Realty Income Corporation, Realty Income Corporation is currently paying a dividend yield of 4.49%. Now that is an extremely good dividend yield for a monthly dividend paying stock. Now yes, this company does pay out a dividend on a monthly basis, which is honestly one of the best things because I love seeing that income coming in every single month from owning this stock. And the other thing that I really like about this company is they're considered a dividend aristocrat. So they've been paying out their dividends consistently and growing their dividends for the last 26 years. And they've been consistently growing their dividends for the last 5 years by 4.38%. So all in all, this is one of my favorite high dividend REITs that I have in my current portfolio. Now the payout ratio for this company is 83.33%. Usually with REITs, they have to pay out at least 90% of their net revenue. So that tells me that this company does have additional room to grow. So I do believe that this company will go ahead and increase their dividends in the future because they do have to get to that 90% payout ratio as well. So guys, if we just look at some of the tenants that Realty Income Corporation has, and we'll go ahead and just look at the top 20 tenants, they basically have some of the top tenants out there that really did not get hit during this pandemic. And if we look at their top 20 tenants, they have Walgreens, 7-Eleven, Dollar General, FedEx, Dollar Tree, LA Fitness, Regal Cinemas. Obviously, those two are probably ones that got hit the most, but additionally, they do have Walmart, Sam's Club, Circle K's, BJ's, CVS Pharmacy. I mean, the list just goes on and on. So as we can tell, this company does focus on some of the best rated tenants that are out there. But now just jumping into the second high dividend REIT that I do like, and this one is personally one that I am currently very, very closely watching because this is another monthly paying REIT, and that's gonna be Stag Industrial. Now, Stag Industrial is in the industrial sector. Basically, with this company, they have industrial facilities that they own, and they go ahead and rent them out to large tenants as well. And personally, because the industrial sector is really not getting hit as much as the retail sector, the stock has actually climbed back up to where it was trading at before the pandemic. And as we can tell here, the stock year to date is up 5%, and then just over the last 1 year, they're up 11%. Now with Stag Industrial, they do have a nice dividend as well, with a dividend yield of 4.34% and a payout ratio of 78%. Now this company has been consistently growing their dividends for the last 9 years as well. So right around that 4 to 6% dividend yield is considered a higher dividend yield, because if we go ahead and compare this sector to some of the other sectors out there for a safer dividend stock that's consistently been growing their dividends, around a 4% dividend is actually a really solid dividend. So I really do like this stock. And if we just go ahead and look at their website, I mean, they have a lot of high value companies that they go ahead and deal with. And as far as their overall value of this enterprise, they're valued at over $6 billion, and they're in 31 different states, and they have many different type of projects that they go ahead and work on, but they're primarily focused on industrial REITs and owning industrial facilities. So this is basically a great way to go ahead and diversify within the real estate sector with a high dividend yield stock. And now let's go ahead and jump into the next one. Now the next stock here is going to be a high dividend stock that's also considered a great growth stock, and that's going to be Digital Realty Trust. Now, Digital Realty Trust is basically a data center REIT, where this company owns the facilities that go ahead and store data, and they work with some of the largest companies out there, which includes companies like AT&T, Verizon, Oracle, IBM. Now this company is growing at a pretty aggressive pace, because if we just look over their last year to date, they're up 33%, and overall just in the last year they're up about the same percent. But as we can just tell from just looking at their overall stock price, this company has consistently been growing for the last 3 years. And if we look all time, this company has a really nice looking chart, and this is exactly what I like to see when I'm looking at companies like this. So I really do like this company. And if we just go ahead and look at some of the other tenants that this company does have, they deal with some of the Fortune 50 companies. Basically, Facebook is one of their customers, Comcast is one of their customers, CenturyLink, Uber, AT&T, like I already mentioned, LinkedIn, Oracle, IBM. I mean, these are some of the best companies out there, and some of the Fortune 500 companies that they go ahead and deal with that are also growing at the same time. So as these companies grow, obviously these companies are still going to need data storage facilities and place to go ahead and store data. So as these companies grow, I do believe that Digital Realty Trust will also grow at the same time. Now, if we look at Digital Realty Trust, their dividends are also really nice, because they're paying a dividend of 2.81%. Now, if we go ahead and match that up to their growth, they're growing and their stock price is growing at the same time. And if you're basically looking to retire in 10 plus years, it's usually much more advantageous to go ahead and look at a stock that has a high growth potential, and at the same time they're increasing their dividends. So to me, I really do like the stock, and this is a stock that I currently do have in my portfolio as well. Now with Digital Realty Trust, they've been consistently growing their dividends for the last 15 years, and they've been paying their dividends since then, and their growth rate is on the higher side. They're growing their dividends by 5.41%. But now jumping into the fourth high dividend REIT that I really like, and this is going to be one that's growing at a pretty aggressive pace, and I really like the future for this company, and that is going to be Crown Castle International, or their ticker symbol is CCI. Now, Crown Castle International is a real estate investment trust that basically owns cell towers, and they have contracts with some of the largest companies out there, which include AT&T, which include Verizon, which includes T-Mobile. And basically with this company, because they own the cell towers and they go ahead and collect rent, and they basically have these wireless communication companies that are on long 30, 50, 80-year contracts, this company is just growing. And the other really nice potential that I really do like with CCI is because 5G is basically around the corner. And with 5G and all the cell phone carriers like Apple, like Google, like Verizon, like AT&T, they're all going to go ahead and get on this 5G network, and at the same time it's going to go ahead and build more value from Crown Castle International, because they basically have to provide the signals and they own the cell towers for the 5G networks. And they are considered the largest cell towers company within the United States. So they're basically cream of the crop when it comes down to the real estate sector within the cell towers space. Now, additionally, with Crown Castle International, they do pay out a dividend of 2.92%. Now, this company just started paying their dividends recently. So for the last 6 years, this company has been paying their dividends and has been growing their dividends, and they do pay out a dividend on a quarterly basis. So all in all, I really do like this company. And just looking at their stock price, just in the last 1 year, this company's stock price is up 23.58%. And if we go ahead and look at the overall 5-year, I mean, you're seeing a growth of 100%. That's an average growth of 20% per year. And this is exactly the type of charts that I go ahead and look for when I'm looking for a dividend growth company that's basically going to be paying me and going to be increasing their dividends over time. And now just jumping into the 5th high dividend REIT that I personally really do like, and I believe this one is a hidden gem. That's because this company does focus on logistics within the real estate sector, and that is going to be PLD, or Prologis Inc. Prologis Inc. is basically another industrial REIT, but their main focus is to go ahead and focus on logistics. They're basically the largest real estate investment trust that owns the real estate and that focuses on logistic facilities. So some of their largest tenants are going to include Amazon and Walmart. And basically with this company owns the facilities that Amazon goes ahead and leases from. This company primarily focuses on having logistics. So if a company wants to go ahead and get into the logistics space and wants to go ahead and make everything more efficient, Prologis would be the perfect match for them. And as we know, guys, with Amazon stock price going up and basically climbing into the next levels here, logistics is something that's a huge focus right now because companies are trying to go ahead and cut their cost. So Prologis is in a very good position from that standpoint. Now, I see the stock just climbing over time because I don't see logistics going anywhere. And with a company that has a niche around logistics that owns those industrial spaces, this is a company that I just see grow as more and more people start shopping online and are going to need facilities that can go ahead and figure out all the logistics for them. So with Prologis, they're actually up over the last 1 year 27.66%, and then year to date they're up 17.68%. Now, if we just go ahead and look at Prologis's dividends, Prologis is paying out a dividend of 2.21%. But the nice thing that I really like with this company is if we go ahead and look at their 5-year growth, this company is growing their dividends by an average of around 10%. And they've been growing their dividends consistently for the last 7 years. So in my opinion, this stock is a very good long-term growth stock that I just cannot see having so much risk on the downside. If anything, I do see this company growing at the same pace that they have been growing. And if we just look at their overall last 5 years, they've been growing by 159%, the last 1 year by 33%, and just to look at their overall 10 years, this company has consistently just grown from as low as $13 a share, and now they're trading at $104 a share. So this is definitely one of my favorite companies out there that I do go ahead and invest in. But guys, as I mentioned, I do own a majority of these REITs that I did talk about. If we just look at my real estate portfolio and basically the stocks that I have within my portfolio, I have 4 out of the 5 of these stocks. Now, Stag Industrial, I am evaluating looking very, very closely because it is a stock that I do want to go ahead and add into my portfolio. I was hoping that the market would eventually dip here in the next month, but it doesn't look like the market is really going to dip at this point. So I might go ahead and bite the bullet and go ahead and start dollar cost averaging into Stag Industrial, but I'll go ahead and keep you guys posted on that. But the other 4 stocks I do have in my portfolio, I do weigh more heavily on Realty Income Corporation because that is one of my favorite REITs, and I do understand that business a lot better than some of the other businesses within the real estate sector because I'm actually involved in that type of space. Now, additionally, if you are new to my portfolio, basically this is my dividend-based portfolio. I call it the bucket list portfolio. All the stocks in here pay out a dividend. Now, I have about 52 or 53 stocks. I believe I'm selling one today because I'm trying to go ahead and narrow it down to about 50 stocks, and I will leave a link down in the description if you guys want to see all the stocks that I currently have in this portfolio. But as of right now, the portfolio is sitting at $49,922. Up in the last day of $171. If we just go ahead and look at the last week, the portfolio is up about $1,000 or 2%. In the last month, it's up $2,450 or about 5%. In the last quarter, the portfolio is up about 13% or $4,500. And then all time, it's up about 16% at $4,524. Now, as far as the stock that I'm actually looking at currently selling, let's go ahead and look at the trades here. The stock that I'm actually going to be selling is going to be Merck & Co. Basically, within the healthcare sector, I do want to go ahead and focus a little bit more on some of the other stocks within healthcare. Now, within healthcare, I have 4 companies that I own. I have Johnson & Johnson, United Health Group, Medtronic, and Abbey. So I do want to go ahead and dollar cost average myself in those 4 stocks where I see the growth over the next 20 years in those stocks higher than I see the growth with Merck & Co. So I am trying to go ahead and niche down and basically reinvest that money into some of these stocks. And then additionally, I am dollar cost averaging into Realty Income Corporation. And then Accenture is a new company that I recently added in my portfolio as well. They're basically a business consultant company. And because that space is within my circle of competency, I do like that space and I do see a huge growth for that space as well. So guys, that's basically gonna be everything for this video. If you are new to this channel, don't forget to subscribe to the channel down below because I do make multiple videos a week, basically going over any of the latest news in the market as well as sharing with you guys some of my top stocks and just keeping up with the portfolio here. Now, I do have a new series that I am creating on my channel that's basically going over reviewing different portfolios. So if you do want to go ahead and share with me your portfolio as well as what your goals are with that portfolio, go ahead and send it to me. I will leave my email down in the description below, and basically I'll go ahead and give you guys my take on that portfolio if it was my own portfolio and some of the things based on your strategy that I believe would be some good recommendations. Now, obviously, I am no financial advisor, so always do your own homework. This is just a great way to go ahead and see different portfolios where I believe it helps the overall community. But thank you guys for watching this video. All I ask is if you don't mind hitting that or smashing that like button because it really does help keep me motivated to keep producing more content like this. And that's gonna be a wrap, guys. I will see you guys at the next one.